this week's outlook. As always, we'll start off with the calendar and then we'll go into the individual currencies. So for the economic calendar this week, these are the main events I'm really keeping an eye on. ISM manufacturing PMI on Monday for out of the US, which is forecasted to slow by zero point 0.3 basis points. On Tuesday, we've got UEDA's speech, which should be relatively hawkish. And then we also have inflation data coming out of Europe, which is forecasted to basically remain the same. Wednesday, we've got GDP coming out of Australia, which is expected to increase by 20 basis points. And then we've also got the services PMI out of the US, which is forecasted to rise. And then on Friday, we have NFP, which is forecasted to slow by around 60,000. And the unemployment rate is expected to stay the same at 4.3%. So all eyes will be on how short-end yields react to this print. So, the fundamentals this week. Obviously, we've got this ongoing conflict between Iran, the US and Israel, which will no doubt result in a massive gap up higher in US oil, gold and the dollar off the open. For the rest of the week, eyes are going to be on US oils movements as well as the VIX to identify whether volatility remains elevated amid the conflicts or if the markets start to price in de-escalation. So money markets will be extremely useful during that period to see, alright, what's the probability of the Strait of Hormuz getting closed? What's the probability of a peace deal coming in? That sort of stuff. But going into the US dollar, so there are many factors at the moment pointing towards upside for the US dollar. Obviously, as mentioned, US oil is expected to be elevated amid the current conflict, and flows being redirected into the US dollar amidst all the uncertainty. Obviously, it's safe haven appeal, as mentioned here, from the risk sentiment being sort of risk off to neutral. Yields are stabilising but could see a downside market open. However, this is due to the flight to safety and not deteriorating US data for now, at least. So obviously the downside move in yields is not going to be due to rate differentials or macro. It's mainly due to the safe haven status of bonds. As long as the conflict continues, US oil remains elevated and markets are uncertain, we will see flows into the US dollar. And I mean, you can see here, we're starting to see a lot more institutions turn more tactically bullish on the dollar, for sure. I mean, BNP, Bank of America, ANZ, Credit Agricole, Morgan Stanley, BNP Paribas. So yeah, definitely bullish on the dollar this week. If you click the bias button up here, you can see that overall we are bullish on the USD. Institutions, bullish. Risk sentiment says neutral here, but off the open it's going to be bullish due to the risk off market open. Yield reactions are bullish. Economic data is quite bullish at the moment. Seasonality is more neutral. So yeah, that is essentially what we are looking at for the dollar. I mean, even if we look at the Fed watch, we're seeing a tiny hawkish repricing in short end yields and in the March meeting. So another reason for upside dollar in our eyes. So yeah, that is the dollar this week. Moving on to the pound, we remain bearish, especially with geopolitics diverting funds away from the more risk-on currencies, that pound being one of them. Data remains weak. We are seeing inflation on a downwards trajectory, as you can see here. Inflation's currently at 3%, 3.1%, down from like 3.8% back in September, which is quite crazy. With the labour market clearly deteriorating, as you can see here, unemployment is also at a 5.2% multi-year high, which is all just essentially turning on the green light for BOE easing. The main data release this week is going to be the spring statement from Reeves on Wednesday, which will be closely watching the reaction in the UK 30-year yields, as obviously a sharp move higher would reinforce our bearish pound bias. And I mean, looking at the institutions, they are all very bearish. There's not a single bullish institution on the pound. And then yield reactions kind of reinforces this. Every data print so far has been very dovish. So this is why this is a very high conviction trade at the moment. I mean, bearish pound, it's one of the more consensus plays among the institutions. They all agree on it. So yeah, bearish on the pound. If you click the bias here, you can see institutions, yield reactions, economic data bearish. Obviously seasonality says bullish, however it's only number one, this is against the dollar, and number two, it's very slightly bullish, nothing major. So yeah, bearish on the pound this week. Moving on to the euro, as always, or as of late, we've been neutral, and essentially you just kept emphasising how it's all dependent on the cross. So the main data this week is the CPR readings on Tuesday, which are forecasted to hold, which shouldn't impact the markets leading into the print that much, and we maintain our bias on euro pound upside, and then euro dollar, euro CAD, euro AD, and euro Swiss downside this week. Obviously, we'll go over the technicals at the end. But yeah, I mean, data is pretty sticky. Yield reactions are pretty neutral to hawkish. Institutions are definitely more bullish on the euro. However, it's it's a very longer term play. But yeah, that is essentially everything on the euro this week, with the main data prints being inflation on the 3rd of March. Moving on to the Canadian dollar, we can see here that, well, it's quite a simple one this week for the CAD, to be honest. We are seeing massive inflows into US oil amid the conflicts in the Middle East, with money markets pricing in an 80% chance of the Strait of Hormuz being shut. Oil markets are expected to spike off the open and therefore benefit their main exporters, one of which being the CAD, another big one being the NOK actually, so you could get into some nice Norwegian krone shorts this week. All eyes will be on the headlines this week essentially for oil. As one step closer towards de-escalation, we'll see US oil retrace its gains and see the CAD weaken. So that's obviously oil-wise. Macro-wise, short-term yields in Canada are melting, which could indicate once oil prices stabilise and the conflict softens, that we will see a massive downside repricing in the CAD. So yeah, risks are tilted to the upside this week, but as soon as there's de-escalation, we can see a lot of these gains be reversed. I mean, the majority of these institutions are bearish on the CAD as well. BNP Paribas, Barclays, Credit Agricole is actually a bit bullish, but bear in mind this was at the start of Feb. So yeah, bullish on the CAD this week. However, as soon as macro takes over and oil starts to retrace, we're back to the bearish. So you need to be dynamic here. So yeah, that is that. Australian dollar, we remain bullish on the AUD. Energy prices are going to remain elevated amid the Strait of Hormuz potentially being shut, which means alternatives like iron ore, LNG and others will perform, not to mention the appreciation in gold, which is another reason we should see some upside in the Australian dollar. Equities though, they may take a hit this week, which could limit Australian dollar upside. However, on specific crosses like AUD-Yen and AUD-NZD, we should be fine, especially with rate differentials continuing to point these pairs higher. I mean, if we just click on the bias here, we are extremely bullish. Institutions are bullish, yield reactions are bullish, and the economic data is bullish. Yeah, pretty simple. We've had this bias for a good while now, and we maintain it. New Zealand dollar, we are neutral to, I'd say, bearish, neutral leaning bearish. If I actually come here, we should be able to see it. Yep. So institutionally, we're clearly very divided. I mean, we have one BNP are a bit bullish on the NZD. However, Morgan Stanley are definitely more bearish. ANZ as well. Credit Agricole neutral. So yeah, definitely neutral to leaning bearish. We can expect the New Zealand dollar to come out worse off following this conflict, due to their minimal amount of energy exports in contrast to Australia. Short-end yields in New Zealand are also repricing to the more dovish side, which from a macro perspective makes the New Zealand dollar less attractive. Equities getting hit and energy prices rising should mean we see some neutral to bearish price action on the Kiwi this week. So yeah, neutral to bearish, that is essentially our bias. All these factors here compiled to bullish. However, we're more neutral to bearish due to the current oil energy sort of landscape we have to work in, which is why you have to sort of be quite dynamic in this sort of environment. The yen, we are bearish on the yen. So the macro landscape from both a geopolitical and domestic level is pointing to renewed yen selling. Japan being one of the biggest importers of US oil, 80% to be exact, which is a massive amount, means they're going to be getting hit from the rise in oil prices. Not to mention last week's data keeping pressure on short-end yields to the downside. I think the inflation print on Friday was quite disappointing. And the long end of the curve is also retracing, but markets are following the short end for now. So yeah, bearish on the yen. I mean, consensus among ANZ, MUFG, BNP is all yen bearish, and we agree, to be honest. So yeah, that is essentially it for the yen. And then the Swiss franc, we remain bullish. Obviously Morgan Stanley came out today and said that the Swiss franc strength is underappreciated and underpriced, so they stay short Euro Swiss. I mean, it's relatively simple. Gold shall continue to appreciate. The Swiss franc is the ultimate safe haven at the end of the day, and we think it can definitely appreciate against the euro as well as Morgan Stanley. So yeah, that is essentially all of G8 sorted, and let's go into the technicals. Starting off with the DXY, we obviously are forecasting some upside. So I think I'm forecasting a gap off the open, and if we do retrace the gap down here, I think we'll then continue to the upside. So I'm looking for something like this. There's a lot of highs up here which you could argue need to be taken, and the macro lines, I mean, it all makes sense. So I wouldn't be surprised if we actually gap up to maybe the 98, let's call it the 98, and then we retrace back down. I doubt we'll retrace down here, so you might have to get in off the 97.75, but you just have to be very careful, and you have to remember you do not want to rush in right now with off market open, because one headline can switch the narrative on its head. So yeah, that's the DXY. GCAD, I like this level here, however I am expecting a gap to the downside of the open. But yeah, the 184.5, this level here, very nice. G-Swiss, similar play here, 104, not a lot of structure to work with, but 104 for sure. GA, I love this level here. I think if we come into this level, this will be a very high conviction play. GU, I think we're going to obviously gap to the downside as mentioned, so we probably, let's say we open up here, I think a retracement into this level before we go further makes complete sense. Euro pound, I really like this level. It's definitely lower time frame, and we might not even get tagged in from London Open, but this here makes sense to me for sure. NZD dollar, obviously I'm not actually in this, I had this marked up, but I did not take this. I think we're going to gap down. We're probably going to gap to hit take profits, and then yeah, NZD dollar downside this week. I think we've got some lovely levels to take out here. I mean, if we just mark out like the 593, you've got this massive level here. I think once we take these out, we could then get some relief in the New Zealand dollar. New Zealand CAD, obviously very much an energy divergent play. I'm looking for shorts up here. Euro AUD, this lovely level here. I could see us hitting this. The gap shouldn't be too mental there. New Zealand Swiss, I think we're going to gap down massively, but yeah, this level, if we don't, this level here will be lovely. AUD NZD, caught a nice 1-to-1 on the Friday, but I think for me to get in, we're either going to gap. Well, I think we're going to gap off the open, and to be honest, I don't see us coming down here anytime soon. But what I think is going to happen is we're going to gap off the open up here, we're going to retrace down, and then we can go for more upside. Something like that. Going then into the dollar yen, I think this level here is perfect. If not, maybe this level here, somewhere here, like the 155.35. Yeah, I like that. AUD yen, similar thing with the yen crosses, and then I believe CAD yen is the same. Yep. Euro Swiss, I think we're going to gap to the downside, and then this would be the level I like to short from. However, I'm being very careful. I mean, we are so overstretched. If we go on the daily, this thing has just been melting since the start of the year, and for good reason. I mean, the macro makes more than enough sense. So yeah, I think we're going to gap down, and then if I was to take a position, it's going to be from this handle here. Euro CAD, same thing. I'm expecting a gap and then a retracement into this level here. Euro yen, I think we could see a bounce from here. However, this is if I was to say the most risky play out of the outlook this week, it's going to be this, because obviously both very energy dependent. So yeah, something like that for a 1-to-1. I'd definitely take only a 1-to-1 here. Yeah. Euro dollar, as mentioned, downside from here. I'm expecting a gap down, then we might retrace to the 118. Swiss yen, I think we're just going to gap up. You're going to have to catch this on very low time frames If we gap up, I'll probably be looking to get in from the retracement we get. Once the gap's been filled, I think we can see further upside, something like that. But yeah, I believe that is the outlook this week. Yeah, so quite a lot of pairs we are looking at. I'd say you just have to keep in mind that the main plays this week are going to be energy dependent. US oil has never been more important, because obviously that is what's going to be determining what's going on with this conflict. Keep your eyes on the US oil, keep your eyes on the VIX, keep your eyes on gold. If we obviously start to see some news come out of potential de-escalation, you're going to see oil melt, you're going to see gold have a big retracement, you're going to see the ES do quite well, the VIX fall, which then in that case we resort to our bias of a bearish CAD, etc. So you just need to be very on your feet, very dynamic this week. However, doesn't mean it's going to be impossible to find positions. You just have to take the correct ones, make sure you're applying your macro. And yeah, so that is essentially it for this week. And yeah, as always, there'll be a discount code in the description for the terminal. We've got a geopolitics page coming soon, which should be very, very nice. As always, the terminal, there'll be a discount in the description. We've got a geopolitics terminal coming soon, which will be it's a very nice, definitely my favourite page we've made so far. That will be coming soon. And yeah, as always, drop comments in the description of any positions you're thinking of taking. I mean, last week we had a great week. If I was to look back at the outlook from last week, I'm pretty sure like within the first day, the majority of our setups had been hit, which was lovely to see. So yeah, as always, let's have a good week, and we'll catch you in the next breakdown.